Welcome back to the Investing Markets and Money podcast. And on this episode, this is more of an internal discussion inside the Armchair Trader team. We're not doing an interview with anybody. We're actually talking specifically about some of the stocks that we like. And joining me on the podcast is my colleague and co-founder, Michael Morton, who's got some ideas of his own. So welcome back to the podcast, Michael. It's been quite a while since we last had you on here.
Thanks, Stuart. Yeah, there's a reason for that. Not particularly comfortable doing these things, but let's give it a go.
Well, we wanted to do this podcast because we're recording on the Friday after Donald Trump's Rose Garden speech in which he outlined his latest set of tariffs. So this is pretty much the news agenda dominating financial markets at the moment. I was at an asset management conference in London yesterday, and although they were meant to be talking about other issues, pretty much all they could talk about was what tariffs are going to be doing to the markets. And it doesn't really matter what market you're trading, whether it's stocks, commodities, FX. This seems to be affecting everything. One of the big issues people are going to have right now is they're going to be seeing a lot of red on their trading screens, and they're going to be wondering about whether they should be selling, like a lot of other people seem to be doing right now. And also on this podcast, what we'll be talking about is what potentially could still hold up in the current environment. There will be some stocks that will be able to preserve some value. Not many, but we'll be talking about a few of those on the podcast. So, Michael, just quickly, what's your perspective on what's going on at the moment?
Well, I think, as you say, screens are red at the moment, and it's just probably a scary time for people that sort of investing and haven't seen this kind of stuff before. So the one thing I would say, I don't know if you're in agreement, but is now's not the time to sell. If you've picked some good stocks, you've got conviction, if you're in ETFs or managed funds, investment trusts. Now's not the time to sell. If you're confident in the quality, you've got a nicely diversified portfolio, then all you're doing if you're selling is you're crystallizing your losses.
Yeah, very true. Very wise advice there. On the podcast, we're going to be looking at 5 stocks. My 3 and Michael's 2. Certainly my 3 are still in the Armchair Trader pick list. Some we've actually held for quite a long time. Subscribers to our 80 Plus service can see that list and how they've been doing and some of our original research on those stocks. But the ones I picked here out of that list are the ones that I think could shrug off tariffs as they stand at the moment, and I'll go into a bit more detail on those. In the interest of time, though, I'll kick off with my first one, which is Babcock International Group. We've had this on our list for quite a long time now. Looking back, it was 5th of December 2022 when we tipped it, and it has been doing very well for us. Certainly, PE ratio is still only 19, and looking at the way the share price is performing at the moment, it's up 43% year to date. Now, that is because it is a defense stock, so we were already quite well positioned with Babcock. We originally bought it because of the Russian invasion of Ukraine, so that's when we initially saw the case for higher defense spending. We didn't anticipate what Trump was going to do, but his policies have obviously boosted Babcock even further. So looking at it now, it is still trading up. I think European defense stocks are going to hold a lot of their value, largely because the upscaling of European defense spending is just going to support their share prices. So regardless of the US tariff regime, they're going to see a lot of additional sales coming in from European governments, European clients. So even if we look at Babcock, I mean, it's still up over 4% in the last month. I expect that we should be able to see some further gains in the course of 2025. So I'm not really worried about that position as far as Trump's tariffs are concerned. Just having a quick look at where we are actually with the position at the moment. So we went in at 291 back in December 2022, and now we're up, at least at the end of February, we're up 130% on that. So it's done really well for us.
I think the defence sector has been fantastic. It's a great place to be at the moment, as you say, with conflict and everything that's going on. What was interesting, see, and listeners and viewers should probably have a look at the conversation you've had with Wisdom Tree regarding European defence as well. So look out for that. That's a really good conversation. Some great insight there from Anika Gupta as well. So yeah, well worth a watch.
Yeah, that's coming out shortly on the channel as well. So yeah, some very interesting insights in there.
So if should I go on with the next one?
Yes, please.
I basically just so we're clear, I'm stealing a couple of James Kofi's tips to talk about. So thank you, James. And he's sort of given me some notes and things. So I'm sort of communicating his thoughts on these. So the first one we've got is a FTSE 250 company called ME Group. It was PhotoMe, and it moved into the FTSE 250, I think, a couple of years ago. So it's a company that's been on the up. They provide convenience services, so they photo booths, washing machines, printing services. Critically, all their operations are UK, Europe, and Asia. There's no US exposure in terms of these services. They've got an existing installed base of equipment, which provides 90% of their revenue. So it's sort of a substantial chunk, and a lot of their equipment comes from sort of non-US as well. So it's better protected from inflationary pressures as well as tariffs. So it's an interesting pick. The stock's down like everybody else over the last 6 months. It's down 4%. But crucially, over 12 months, it's up 10%, and then over 5 years, 386%. So it's a company on the up. It doesn't have that exposure to the US, and I think it's an interesting choice. We added it to our pick list in March of last year.
And going on to my second pick, it's Implenia. A lot of people may not have heard of Implenia. It's actually listed in Switzerland, and it's a construction and civil engineering group. It is mainly active in the Swiss market, but they do some work in some other European countries, including Germany. There's quite a lot of activity there. Austria, France, Sweden, Norway. Another pick of ours. I just liked it because financially it's a very robust company. It makes money. It's very conservatively managed. Its focus is in Switzerland. We are up on this one about 35% so far. But the thing I like about it, no exposure to the US, no exposure to US tariffs. It can keep doing what it's doing. You've got a PE ratio of 8, which makes it still very cheap. Dividend yield of 2.19%. And the thing I really wanted to point out about it, just as an illustration, is this week it's still up 2.25%, which
Wow.
is incredible given the week we've had. Just today, it's up. So it goes to show that regardless of what Trump's doing, they seem to, the investors in Switzerland seem to like this one. So I'm certainly sticking with Implenia because I just think, I think it's a great company already without the tariffs. But I think some Swiss investors are obviously casting around looking for something that doesn't have much exposure, because to see it being bid up from 40 to 41.5 Swiss francs this morning. Even as I'm looking at the screen now, that just shows you that it's a great stock. It's really high quality.
It just goes to show, doesn't it, that there's always opportunity. There's always areas that even in a falling market, there's opportunity.
Yeah, and also, I mean, I think this is the trick now for people. There is a temptation to just sell everything, go to cash, go to gold. I'm sure there's quite a few institutional investors that are going to be doing that. Just sit it out, wait for things to calm down again. But the fact remains, as someone was saying to me yesterday at the conference, we roll from one once in a generation crisis to another, and it never seems to stop. So if you're taking the view, well, I'll wait till things calm down a bit, you could be waiting for quite a long time.
Yeah, I mean, if you've got a long-term view, then you're always, in my view anyway, you're better to be in the markets than not, and because history tells us that the markets recover.
Yeah, absolutely, absolutely. So, what's your next one, Michael?
Right. Well, James's next one is Volution Group, so another FTSE 250 company. This was James's first tip, I think. So I'm not sure. I think it was around December 2023. This one, and it's a ventilation supplier to residential and commercial businesses. So crucially, again, no US operations, but they export to Europe and Australia. They benefit from US competitors being priced out going forward, potentially. Because obviously, if tariffs are reciprocated, then US services are going to be much more expensive. So there could be an opportunity for Volution Group to boost sales in those areas. Again, over the last 6 months, the share price is down. It's down 14%, but over 12 months, it's up 21%. And over 5 years, again, it's another big one at 258%. So again, it's generally a company that's been on the up and looks in interesting shape. Again, not particularly exciting, but maybe that's what investors should be looking at the moment, because the exciting stuff is being hit.
Yeah, very true. There's a big reversal out of the Mag 7 trade. We've certainly been seeing that since the start of the year. Again, talking to asset managers, there's a lot of hedge funds now shorting Mag 7 stocks. And a lot of those now seem to be in free fall, at least this week. So we predicted actually in our December forecast for 2025 that was a trade that was going to unwind, and a lot of those companies were going to close the year down, and that certainly seems to be playing out at the moment. And then just coming on to my final pick, it's Gaming Realms. Gaming Realms won our award, I think, for AIM Stock of the Year 2024 in the Online Money Awards. And it's a company we've liked for quite some time. We're up 48% looking at this chart since we first tipped it to our readers. Gaming Realms is a company that develops online games for the international gaming industry. By that, I mean the international online gambling industry, not video gaming. But these are games that companies like casinos, online gambling companies can use. I'm not a gambler myself. It's never appealed to me, but it is a sector that does well during times of economic crisis or economic slowdown. Don't ask me why. Gambling and alcohol seem to be fairly consistent performers regardless what the rest of the economy is doing. Gaming Realms has been expanding abroad. They're expanding into the US because they sell their software to casinos in the US. The US is gradually liberalizing online gaming there, so Gaming Realms is tapped into that. But they're doing well in other markets as well. I know they're expanding into Brazil, for example, at the moment. Still quite a cheap stock. PE ratio 12.74, so I don't think that's looking overpriced right now. Up 13% over the 12-month period, but you saw most of that in sort of April, May last year. So I guess my one criticism of it is that it has been fairly range bound. The market's looking at a price of about 35p on this one. It doesn't seem to be able to shift much either side of that. But I think this is one that still seems to be doing well. And I think, regardless of what's happening with the tariff environment, I'm expecting Gaming Realms should be able to shrug that off and just carry on regardless. So I'm not seeing any major selling activity in this company. If you're on our podcast channel, you can search back, and there is an interview with the CEO, Mark Siegel, which we did some time ago. I think it's almost a year ago now, but that's probably still worth listening to as well if you want some further insight into Gaming Realms.
I think if you're on YouTube, we'll put a link in the content below, just so that people can find that.
Brilliant. And that's it, really. That's our 5 stocks. Thanks, Michael, for joining us today and for your insights.
That's all right. Pleasure. It's great. Good fun.
And also, we're doing this on video, and just we'd love to hear what you think. So please give us some feedback. Also, if you want us to look at other areas of the market, particular stocks, anything like that, we might do some more of these rather than just our CEO and fund manager interviews, which we're pumping out at the moment. So any feedback, any special requests, do let us know.
We'd love to hear from you. That's brilliant. Thanks, Stuart.
No problem. Thanks a lot, all.